7 streams of income to be a multimillionaire. That's what we've heard our entire lives and from all the gurus out there. But as a financial advisor, I've seen firsthand that you don't need 7. And I'm gonna show you how we're gonna do that. When we hear about Mark Zuckerberg, Mark Cuban, Warren Buffett, yes, all of these guys, they're multi-billionaires, they have multiple streams of income, but guess what? They didn't start that way, right? Most of the time, these types of people, they have one business, one stream of income that they focus on and build so high that they have so much profit that they then need to diversify and invest in different little things. Those different investments is usually what creates those different multiple streams of income. So what I want to do for you guys is help you take a step back, get to the beginning, and let's focus on steps 1, 2, and 3 before we start thinking about 5, 6, and 7. The 7 streams of income. Let's focus on this word for a moment right here on income, and let's go through the list. Earned, we're talking about your W-2, your 1099, anything that you're doing to trade your time or your effort or your energy or your hours to clock in, clock out, and get paid. That's gonna be your earned income. Profit income is gonna be a business, a side hustle, a partnership, anything where you've got something generating income and revenue and you're getting a split from it, either after you're paying expenses or you partnered up and invested with somebody and the project's done and you get paid out and you get your profit. So I'm gonna put here business, side hustle, etc. So at the beginning, this profit can look very similar to your earned income because at the end of the day, this profit most of the time will require you to be somewhat active. Maybe not 100% all the time, but at least you're gonna be focusing and doing something actively to make some money here. Interest income, the way typically that we hear about it is a savings account, right? You've deposited some money, the bank uses it, and in exchange for you parking your money there, they're gonna give you back some interest. As we all know, that pretty much means 0.0001, almost nothing. Moving down to dividends, this is where you are buying stocks in companies, blue chip companies like Amazon, Facebook, Google. And when these companies perform, when the quarterly reports come in, they pay their shareholders a percentage of the profits. So typically on one stock, you're getting at usually about 0.25%. And this payment is either quarterly, every 6 months, once a year, whatever it is. But this is what you have to do. Again, you're putting money in stocks long term, you're letting it sit there, and you're waiting and watching the investment go. You're buying rental properties, either multifamily or a single family home, or now what's popular is Airbnb, anything like that, where you're putting a down payment on a piece of real estate, and in exchange, you pay the mortgage, you pay the maintenance and all that, you charge a rent, and you've got a renter in there who, after paying all the bills, let's say you're making about 0.5% a month, which depending on your property value is either gonna mean $50 or $100 or $150, something like that. Capital gains, this one is it works with number 4, the dividends. This comes from owning stocks, but in this case, you're actually selling your positions, you're selling your shares. For instance, you've bought Facebook 3 years ago at $150, and today it's $210. So you're gonna buy and sell your shares and take that 60% gain or $60 gain and make your profit that way. So, you know, this can be, depending on the market, whatever it's gonna be, but again, this relies on you either picking really good stocks yourself or having a good financial advisor or a good stock trader for you doing it. Royalties, this one's also a bit of a question mark because it can mean anything, right? It's a very creative area where you're either licensing something or you've got the patent for an invention, or you're doing something where you're getting mailbox money in at all times, but at the end of the day, it takes a really long time to get to this level. So here's the top 7 streams of income and what they mean. How about now let's put some numbers in behind it. Let's say your earned income is $100,000 per year. All right? So you're making this $100,000, you're either working a job or you're a 1099, you're a consultant, whatever it is, you're trading your time and your energy and your hours every single week to make this paycheck every single month. Now, just for examples purposes, of course, we all have lifestyle, right? We got bills to pay, we got food to put on the table. I'm gonna subtract from here 70,000 for our expenses, which is gonna leave us with $30,000. We're just using base numbers right now. We're not talking about taxes or any of that stuff. Let's just use round numbers. So $30,000, we're gonna call this your savings. So typically this money would either be sitting in your savings account at the bank, or your job is to plan and look ahead and figure out, all right, what am I gonna do with this money to make more, right? So if we take this $30,000 and we apply it to these different types of incomes, I wanna show you guys where you're gonna get more leverage and more value from it, right? How about we start at the bottom? If you're working a W-2 job, let's just cross out, you're not gonna have any royalties, all right? Capital gains, let's say you put this $30,000 into Facebook stock, right? Again, remember, in order to make capital gains, you gotta wait over a year, right? So if we're using the average of 8% per year, the S&P usually goes up 8% per year, that's the benchmark. In 1 year's time, off of $30,000, you will make, all right, 2,400. All right, cool. If you take this $30,000 and you buy a rental property, right? Obviously, if this is the money that you have to start with, you're gonna buy something that's within your budget. Probably a $30,000 savings will buy you a $100,000 property, at which case maybe you're gonna be renting that out at, I don't know, $1,000 a month. So after all the expenses and everything, let's just say you're gonna make 50 bucks a month, which equivalates to 600 a year, all right? Which we'll talk about why this doesn't look so attractive and why it doesn't make so much money, but let's keep going. Same thing with stocks and the dividends. You buy a stock and like Coca-Cola. We hear a lot about Coca-Cola. It's Warren Buffett's favorite stock. He's been getting dividends from it for decades, and he makes millions of dollars off his dividends just from owning Coke. But guess what? He also owns millions of shares, which cost him billions of dollars. So you can see this 0.25%, it can be a lot, but you gotta have a lot to get in there. So again, this $30,000, 0.25% would be about $100. You're gonna make $100 in the year off of dividends, owning some stocks. Interest in your savings account, I think we can all agree this would be non-existent. It's a waste of time. You're not gonna get anything other than the bank statement coming in your mail, taking up space. This is the key one that I wanna talk about. the profit. All right? Because why, when we're doing a business or we're doing a side hustle, I want us to use a benchmark of 20% return per year. All right. Now, of course, this number, it can go lower, about 15%, or if your business is busting out, it could do a lot more. But let's use this 20% as a baseline. If we take this $30,000 and we're able to put it into a business or a side hustle or something that makes us a profit, you can see us making $6,000 in 1 year. So if we look at this list, where are we getting the most bang for our buck? It's not down here. It's not in capital gains. It's not in rentals. It's not in dividends. It's in the profit of businesses and side hustles and active investments, right? So if I take this $6,000 and we add it to the end of year valuation, you can see how at the end of year one, how much money are we gonna have? 30,000 plus our profit, $36,000, right? Okay, we had some little bit of growth. Let me take you guys through what year two would look like. All right, year two, remember, we're gonna keep the same job. We're gonna make $100,000. We're gonna pay $70,000 for our lifestyle. We're not gonna increase our lifestyle. We're gonna maintain it the same. And we're gonna have this $30,000 savings again in year two to add to our business and side hustle to make more profit. All right. So we're gonna start with another $30,000. Okay. We're gonna add our 36,000 from, remember, year's one's profit. And now if you've got this much invested and we're making 20%, how much is that? We got 66,000 principal, and then we do 1,200. We got about $78,000, right? Year two end. You see how we quickly went from 30 to 78 in 1 year's time. We literally doubled, more than doubled our savings account. And of course, we can do another video where we go year 3, year 4, year 5, and you guys can see the power of compounding year over year. Huge, huge advantage of being in this number 1 and number 2's areas. If we're at this level, making $100,000 right now in the example in this video, everything below here, it's irrelevant. We don't want to care about it. We don't want to spend time doing it. It's not really going to move the needle for us in terms of making any type of meaningful growth or meaningful profit, right? So again, going back to not getting overwhelmed with the 7 streams, let's just focus on the top 2, okay? The top 2 meaning I'm not saying that your earned income is at its maximum potential. If you can get a raise or change jobs or get an extra certification or another license, whatever it is, if you can do something to make yourself more valuable at your company, to your boss, to your enterprise, to increase your earned income, that's a huge bonus, right? And then this second part, the profit, you're looking for that business or that side hustle or that partnership, right? Finding a joint venture deal maybe where you can partner in, make a good return, and not necessarily have to manage and spend so much time doing it. These are gonna be your top 2 areas that I really want you guys to focus on. I wanna make a very clear distinction by drawing this line right here under number 2. Everything on top of number 2 is what we call active active income or active revenue, right? Everything down here, numbers 3, 4, 5, 6, and 7, passive. What do we mean by passive? This is where your money's working for you. You've got a big stockpile of profit, you got a lot of savings, you got a lot of capital to work with that you don't really know where to deploy it. So what you do is you put it into one of these vehicles, hands off, you're not doing anything with it for a long amount of time, and in return, you're making these small little percentages going back. So again, we want to focus on active right now. What can we do to get ourselves from our position now to the next level? If you want to learn more about wealth building and income generation, don't forget to hit the subscribe, like, and comment buttons down below, and we look forward to seeing you next time.